Greetings guys, I welcome you in this wonderful video. So in this video we're just gonna be digging deeper into the chart or into the price action of V75. We're gonna try to detect and spot the details that usually take place when the market moves or when the market behaves based on price action. Yeah? So this video guys is not a signal, but it's just for educational purposes. It's gonna just give you an insight on how you should go about analyzing and how you should take your trade as you are trading using price action. Yeah? So here I'm on the 15-minute time frame, and we can clearly observe and see that the market is moving in an uptrend. We can see that it is giving us a sequence of higher highs and higher lows. Ne? But this is, let me just put it there so that you don't interpret it as a trend line. Ne? But we can see that it's higher highs and higher lows. It's just so clear that the market is moving up. Ne? Let me just give you a glimpse of a higher time frame. Maybe let me go to the 30-minute. Here we are on the 30-minute time frame, so you can see clearly the waves and how long this trend has been persisting. You can see that it's a really long-term kind of a trend. Ne? So if you can observe clearly, ne, I want you to observe how the corrective waves and the impulsive waves were related. Ne? I'm just gonna start here. You can see that here we had this high which turned into a low, or which turned into support. So a resistance becoming support. Even here resistance became support. So I want you to take note of this pattern or of this market flow, how the trend was behaving, because that's the first thing that you should look for, or that's the first thing you should observe as a trader. Observe how that trend was behaving, or how the waves, the impulsive and the corrective waves, were related. So here we had the retest patterns taking place where resistance turns and becomes support, resistance turns and becomes support. Even here we can say this resistance turned and became this support. Now even here, those who like to focus deep into candles can see that this area of rejection changed into an area of an initial impulsive wave. So now let us go into our current move, what we are expecting and what we should pay attention into. So here is our resistance there. If I can extend it here, you can see what is happening. Let me just go in the 15 minutes so that you can see it clear. Here we are on the 15 minutes. We can see how clear the market is, how clear the patterns are, and the waves as well. So here we can see that this area of resistance here on this current state, we are expecting it to behave as an area of support. But however, we shouldn't be blindsided. We should focus on what the price is gonna tell us. For an example, we see that this wave, it breached this level a little bit small, which is insignificant. So we can see that the market reversed. It pushed all the way up, but however it failed to push above this, or at least at the same level of that high. It failed, meaning this high still confirmed that this corrective wave is still proceeding or is still going down. And then we have this current wave now. So for us to say now we have to buy or we have to sell, we have to observe what is likely to happen here. For an example, here we had a double top here, or a double touch here. So it is likely that maybe even here we might have another touch, which will then give us a good buying signal if the market is gonna buy. But however, even if this area is breached, let's say the market behave and goes all the way down, we still have a level which is our border, or which is our limit. This is the level which is our limit. For an example, this level, above it is the territory of the buyers. That's what I always say. Above it is the territory of the buyers. Why? Because of this area, this is where the buyers took the price in terms of this impulsive wave here. This is where they took the price. So as long as the market is above this area, it is still on the side of the buyers. But however, you as a trader, it's just gonna, this is a method that's going to help you if you are a risk taker. Let's say now you see that you observe the price going down. Let's say it goes down and it gives you a low which is lower than that one, ne? Let's say it give you a low and then it bounces all the way up, ne? Now you should then focus into this area again, ne? If you want to trade the corrective, you'll focus into this area again and say, okay, if the price comes in this area and then bounces again, then I'm good to sell here. However, when you sell as a trader, you should have your eyes opened. You should have your eyes opened and observe what the price is gonna do as it is approaching this area, meaning you can scalp here and sell and then try to exit when the price is reaching that level that is gonna be formed. Those are just predictions, but what matters the most is to pay careful attention into everything that this area here is gonna give us, and everything that this area is gonna give us. That's where you should pay attention into. If you observe the market bouncing before it breaks this low, if you observe the market bouncing and going all the way up, that will be a sign that, okay, now the bars, they're getting strong. But then you should wait for the last confirmation. What will be the last confirmation? Obviously, it will be a pattern break, a break of this corrective pattern, meaning when it breaks here and then you can enter. Or however, if you are cautious or you wanna a really safe enter, then you're gonna wait for a little bit of a retest and then go long as a buying signal. And when you buy, you need to pay attention that you are buying to the entire trend, meaning when you buy here, you should be really holding your trades for a longer period of time. Don't just buy here and then exit instantly. So I hope that is making a lot of sense. So yeah, that's what I wanted to highlight, guys. Thank you for watching this video.